Well, there is a lot to talk about today. Yesterday we were discussing some price targets on Bitcoin and Ethereum, and while we were anticipating a further drop, I was kind of not expecting it to come so soon and so violently. Such a huge down move on the weekend was a little bit of a shock. You had a pretty sizable move, 7% or so I think it was on Bitcoin, and obviously higher on altcoins. But there's a lot to talk about today. We've got to talk about crypto and the macro in general, the stock market, precious metals, as well as all of the stocks that I've analyzed already. I can give an update on where those are at, and to be honest, I think my outlook is becoming even more pessimistic. I was already feeling quite bearish on the stock market and whatnot with these moves from Bitcoin. I think it's and gold and precious metals. I think it's clear that we're in for some pain. So what's going on? Well, we clearly broke this support line. Was not enough to hold Bitcoin or Ethereum, so we can scratch that. Not good for a short-term bounce. That being said, we did correctly predict a small bounce on MicroStrategy. I think this is obviously going to get sold off coming tomorrow, and this trend line no longer really impactful, so we can get rid of all of this. On the bright side, price is pretty far from the EMAs, and we did wick below prior support, a lot of it. I think we can go lower at some point. That's almost without a doubt at this point. We are seemingly in a pretty bad bear market for cryptos, but there are some interesting charts I want to look at. So obviously we may get a bit of a rebound here. I wouldn't be surprised. This wick was bought up in a big way, which signals to me that you had a lot of liquidations going on here, and a lot of smart traders were buying this level with orders. A 5% move recovery already is pretty sizable, and it's a very similar story on Ethereum. I'll go and show that. Yeah, we just hammered straight through this line here, did not really do anything, and I think the smart traders have been basically front running this level here down around 2,100, 2,150, because we got such a steep decline that made for quite a nice buying of the crash essentially, and getting a nice sort of 10% rebound already on Ethereum and on many alts as well. There were some incredible entries on certain alts where people were just getting completely liquidated on Hyperliquid and this kind of thing. But regardless, this could be a place where we get a little bit of a recovery for now, I'm imagining. That being said, I am looking at a couple of other things. Firstly, the dollar is, well, it's been in this massive parallel channel for quite a long time, since basically 2015, and we briefly wicked out of it, and I think, my impression is that we're just wicking down here to fake people out, essentially, and the dollar's actually just going to run up pretty big time from this point. That's how I'm thinking here. There could be big moves coming in the dollar, and typically when the dollar moves higher, it's not a great thing for risk assets. The money essentially is incentivized to flow back into the currency as opposed to the assets. So you've got to imagine this is, if this is reversing the massive moves that we saw on gold. Sorry, this chart's a bit of a mess. Not too bad, I guess, but the big move down we saw on gold and on Bitcoin could be just the beginning of further down moves if the dollar is going to recover substantially, which I imagine it will. Looking at this chart, this is sort of a textbook fake out and then break out kind of situation. Then we factor in oil. Oil is on the up move at the moment as well. If we zoom out, we can see that oil has been trading in this parallel channel as well, and typically when you get to the top of the range here, that is corresponding to a pretty nasty event in the market. So here you had 2008, over here you had the 2022 sell-off. So and likewise when you're at the bottom, it's typically a good time to it's indicating that stocks have some way to run. Just to do with the macro environment in terms of inflation, oil is a huge component of inflation. If the price of oil is higher, it means all the input costs for businesses are a lot higher. So when oil is low, it's very stimulative for the economy, and vice versa. When it's high, it's the opposite. It's a drain. It's inflationary. It's just really not a good thing. So if we are moving back on oil, and we've got the tensions in Iran happening, they could close the Strait of Hormuz, which would impact the price of oil presumably. So I think there's a big scenario that could play out there in conjunction with the dollar going higher. This combo I think can be really terrible for risk assets. So if we take a look at the S&P, we're also, I won't really redraw the lines necessarily here, guys, but these are the sort of lines I'm looking at on the S&P. We've got this massive parallel channel going back all the way to COVID, essentially. Way back here, and we've not quite reached the top of it. There's also this line here which we've rejected from, so not sure how it's going to play out for the market, but you're imagining that at some point we are going to get a pretty sizable correction, and I've got levels here on the S&P if you're interested in those. It's very possible we're going to sell off on this at some point. I don't know if that's going to come immediately, but you've got bad omens in the form of the gold sell-off, the Bitcoin sell-off, oil moving up, the dollar potentially rebounding. So all of these factors combined lead me to think that we're going to get a pretty sizable sizable move, in the stock market as well to the downside. So that leads me to talk about, we can also look at the yield spread, which if this is going higher, it's essentially typically signaling that we're going to be in a recession and things are bad. And you can see we're still at a level where it's not quite the end of the world. Let me put this on the monthly so you can see a bit better. But yeah, you can see that essentially we went way inverted, which is usually once you invert on this particular chart and you head substantially higher, that is typically a signal of a recessionary environment. And essentially this is just a measure of the Fed needing to cut rates aggressively. You can think of it in that way in some sense. So once this metric goes higher, it's sort of predicting you're in a recession and the Fed's gonna have to cut in the short term. So watching this very closely as well, but it looks like it's about to go on a run if you see the EMAs are crossing. It's going to be hard, I think, to see this going back down before it goes a bit higher. So I think all signs right now are pointing to a pretty miserable time for equities, assets, all the rest of it. So keep that in mind and take whatever I say in that context. If I'm giving you a price level on something, of course, never financial advice. We don't want to get sued here, but all the charts I'm going to show you now, just keep in mind there are viable levels, but depending on how long a bear market lasts and how bad a recession is, and how the Fed responds in terms of do they cut rates or do they pause for a long time? Do they even have to hike rates because of inflation due to oil going up? These are all considerations that could really impact, stocks. Even if you have a good price target or a good level, it's not necessarily going to work out in your favor. So BMNR is probably going to crash through this. This is not really going to hold up this momentary support here. I think we're going to go quite substantially down. We can take a look here and see, yeah, probably 15%. I think it wouldn't be impossible to get to $21 or so Monday. Might not go as low as that. How much did ETH move? ETH right now is essentially down 10%. So we'll see how it goes on Monday. You might find that BMNR, for example, is ending up at the bottom of this parallel channel, which I think would be a good opportunity for a bounce. So I would actually be a buyer there, probably personally. Do your own research or whatnot. Yeah, I would personally be very interested in buying the low on Bitmine here. Likely going to get a rebound. And I also think, guys, that on Ethereum, I did previously say that this level at 2,150 is solid, and it probably is. I think you will find that there is support there. But the fact that we wicked down but didn't quite get there is concerning to me. I think on the next run, you're probably just going to smash through this line, to be honest, and it's not going to put up that much of a fight. I would imagine you're going to, if you want an entry on this, you're going to have to put it quite a bit below, this prior support, maybe around $2,000 or so, because I think it's just gonna hammer through. The way to think of it is the further price has to fall to reach a level, the more likely it is that the level is going to be bought up. But the fact that we're actually kind of close to the level now, it means if you do have a large move, then you're going to have the impact and the velocity to just kind of crash straight through it. And I think a lot of people will be buying this level, myself included. I probably would have been. So I'm readjusting the target here for if we are going down further for potential short-term bounce to around $2,000, just because you're going to be able to drop below all of the support here. You're going to liquidate people who are leveraged into positions at this point, and you're going to push people out with stop losses, and then you're probably going to reverse on Ethereum. So that's the outlook on Ethereum. Yeah, long-term targets remain still maybe 1550 on ETH, 1600, something in this range, and on Bitcoin, 60,000. Of course, I think at some point we need to have a serious talk about the treasury companies, particularly MicroStrategy and the rest of it. Like, are they actually, what is going on with this? Is Michael Saylor going to be under pressure? Is there going to be an extended bear market where their obligations in terms of the preferred stock that, they're required to pay dividends on and all the rest of it, all the debt they've accumulated essentially, is that going to come back to bite them? And I think, probably the answer is going to be yes at some point. The question is whether it's in this particular bear market or, a nastier bear market down the line. That's the question. But you've got to imagine if the tech bubble, the AI trade is going to burst at some point, which it likely is, right? The stock market's essentially being held up. Another interesting chart, by the way, guys. QQQ double top here, put in. Looks pretty grisly. Probably going to head a lot lower from here. Not sure if this is going to hold. We're looking at quite a bit lower. I'm not necessarily going to do price targets at the moment, but you can see somewhere around here might be good. There's a gap fill all the way at 492, which would represent a pretty sizable 20% correction from here. Not impossible, to be honest, not impossible at all. You broke out from this parallel. It's not been looking super, super hot for the NASDAQ. So danger. Basically, there's a lot of danger in the market. And I think, let's talk about the stocks that I analyzed last week. So we've got ASTS. Would you look at that? We tried to break out from the parallel channel, got rejected, and a steep decline down at sort of 10% or so on Friday. Could imagine the downside will continue on this. You've really been struggling to get out of here, and that's not a good sign. So I imagine if the market's selling off, then ASTS will get smashed. What else have we got? Reddit. Reddit, we're approaching the targets that I had. I'm a little bit cautious to actually buy the bottom of the parallel channel. I feel like if there's going to be market weakness in general, then this might not hold up actually. And I could see Reddit just dropping like a stone to some extent. I've got orders in at 162 and down at 126, but I'm not convinced that the parallel channel is going to hold at this point. Usually I like to buy the bottom of these kind of patterns, but like I said previously, I think wicking below this at least, and then maybe you get a recovery is a type of thing. But to be honest, there's a real danger of even trying to position for long-term positions at this point. Like, I'm a little bit unsure that it's even wise to be getting in at 162 for the long term. Like, I think you're going to come down here on Reddit to 126 at some point. Likewise with Duolingo, we just smashed straight through this this level. Was not really good enough for much more than a 13% bounce, so it wasn't too bad, that level. But yeah, we're going to be coming down, I think, to this $95, $100 sort of range in the near future, which represents a further 27% decline. But you can see how everything's lining up. Essentially, similar story on Adobe. We had support here, but hard to say. I think price is going to collapse below this, to be honest. And I think the moral of the story is essentially these levels that we've been talking about, they're maybe good for short-term bounces, but any bounces that we're getting at the moment are quite mediocre. They're really not having a lot of oomph to it. With Adobe, you only got a 5% move, which is really not that much in the grand scheme of things when you're tagging such a trend line. So that's quite a bearish sign, and it says to me that you should not really be in long-term positioning necessarily right now, unless you are just a long-term investor and you want to hold through all the volatility. But essentially right now it's paying to be a sniper, and you want to get in and out very quickly and not mess around, getting stuck in a position, buying these kind of levels that end up just being broken. I think the lower targets could be reached in almost all cases here, and those are probably going to be good levels to buy, but there's probably going to still be volatility. Even if you get down to 235, for example, on Adobe, you may be dropping even lower to 195. I think the market might just be getting a little bit smacked around. UNH, we talked about before. Yeah, it looks like it's still going to come down to this gap at 273, and probably I think we're coming back to the bottom of the channel. We'll see if we go below that, but typically healthcare is more resilient than other asset classes when the stock market is doing poorly, so I wouldn't be surprised if you can find support at the parallel channel. Maybe we will be going lower though. You could never know. Netflix has been managing to hold at this level, but we'll see. I'm again thinking it's going to be a similar story to with Duolingo and Adobe, where you have this sort of preliminary buy the dip level, right, where everyone rushes in to buy, and then at some point after a small recovery, the price just sort of crashes through, and you get this big corrections coming. So I'm again looking on Netflix around $67, 20% down from here, which would correspond to a NASDAQ sell-off of 20%. So I think that's pretty reasonable expectation. So yeah, guys, in total, the charts, it's all leading me to believe that we're going to have a pretty nasty sell-off in the stock market. While it might, the dips have been being bought, as is the case with sort of index funds. You just have a constant bid on the S&P and on the NASDAQ. So that's always going to be making it harder to break down. But I think once you do start to break and people start to panic, then there's going to be a real flush out. That can be very nasty. So yeah, all signs are pointing to further downside. Be careful if you're positioning long, because I think, while there might be a recovery bounce on Bitcoin or whatever, in the long term, I think we are headed a bit lower. And I do think there's more chance now of inflation picking back up than there previously had been in my mind. It sort of felt like a guarantee that inflation was done, but the fact that oil is beginning to rise, it's a double-edged sword, because if you end up in a recession, because of oil going up, then it doesn't necessarily mean you're going to have inflation, because recessions are not typically good for inflation, right? People don't have money to spend, prices collapse. But I could imagine the Fed messing up in some way. Kevin Walsh has been known for being a bit useless, and he's going to be the new Fed chair, so he may see some uptick in inflation due to oil coming up or whatever, or what have you, and decide, actually, I think we need rate hikes. Or he might not be doing much quantitative easing because he's worried about inflation picking up, and this could exacerbate issues that we already have in terms of the dollar going higher, in terms of the S&P and the QQQ selling off, which in turn means people have less money, which in turn means a recession is more likely, and I think you're starting to understand the picture and why Bitcoin has sort of been the canary in the coal mine, selling off very sort of early compared to other assets. It's sort of the most liquid and accessible and speculative, one of the more speculative assets. Oh yeah, one last chart, guys. Bitcoin to gold ratio. Now, I am very interested in this one. Could be a very important chart, as I mentioned before. If you want crypto to succeed, you need this chart to reverse here. And it was looking promising on Friday because gold had a massive sell-off. So in comparison to Bitcoin, gold, was having a very bad time. With this Bitcoin sell-off, we're now trading on the line again. So we'll see on Monday if we can get some good movement for Bitcoin and crypto and begin outperforming gold again, essentially on the long term. If you can do that, then I'm more bullish on crypto, and I would be more tempted to buy the dips. But if this starts to break down alongside the markets in general, then it might be really getting ugly for crypto, and I'm not even sure the targets at that point would be holding on the lower side. So we're just trying to remain completely objective here. I'll be honest with you guys, I'm quite heavily in cash at the moment, so and it's been feeling quite good because I think there's a lot of good opportunities coming, and it pays to be having that flexibility. And I also just think the dollar is probably going to remain quite strong from this point going forward. Fed's probably not going to cut rates for quite some time, I would imagine. Maybe there's even a chance of rate hikes at some point. I think it's not completely impossible. So yeah, that's everything I'm thinking about. Just be cautious out there, because I think even these levels are, if I draw a yellow level, definitely don't take that as gospel. Those are quite weak. Green level, a much better target to be hitting. But with that being said, guys, I hope that's helpful. I'll be back, of course, tomorrow with more unique charts, and we'll make this a regular weekly thing where I do a wrap up of the market and let you know what's going on macro-wise. I think that could be very helpful. But keep your wits about you. As I said, try to be a sniper in this market if you can, I would say. Try to have some good cash exposure so you're not getting caught completely allocated if everything is just coming crumbling down in the short to mid-term, as it may be doing. Anyhow, subscribe for more videos, guys. Thanks very much for watching, and I'll see you next time. Bye-bye.